Good morning everyone, Philip from Blackpool Markets here. I hope you guys are all doing well. So I just want to get another market update for you guys. That's a bit of a catch up on what we were looking at last time, or the last video we did. So we've dropped some pairs, we've added a couple, one. So we'll be focusing on these pairs now. I also just want to get you guys up to date on what has happened with some of them. Also just a quick bit of insight and a bit of advice that I have found over the years in my experience of trading and studying the market. So we'll start off with this. We'll start here on the AUD JPY. We've got the 4-hourly time frame. You can see here that we actually have, we were looking at this top for it to be broken, and we actually were opened up with a gap above that top. So just a quick I'll say advice a bit. It's not always 100% accurate, but it is the majority of the time I found this to be very true. So if we do see a big gap to the upside, the market does tend to fill it. So just be aware of that. So if you do see a big gap to the upside, don't. I would advise not to jump in the trade because you're scared of missing out on a trade. Rather wait until the market settles down and see what is happening. So a lot of people would have entered a trade because of this big open on the gap right over here. They would have entered there, and they would have retraced. Some people might have entered as soon as they saw the candles going green, and obviously we can see this big move back and actually broke past this top again, completely ignoring it as a support. So just a bit of a word of advice: if you do see a big gap, rather wait for the market to sort of figure out what it wants to do, and then look for further patterns to continue. So you can see, coming back to the market update, we can see it has broken past, so we're potentially looking for a move to this range down here that we've had on about 81.1. That could potentially actually form a head and shoulders. So using this as our neckline, again coming back to the neckline and using this as our shoulder. So we could see a move potentially back to here and up to here for a further move further to the downside. If we look to the daily, we can see it is actually in a bit of there's a lot of support and resistance area. So I mean there's a good chance it could potentially move to this line over here for a head and shoulders pattern on the 4-hourly bar chart. And then if it does hit here and it breaks past this resistance at 83.05 that I have it, we could potentially see further moves to the upside, keeping in mind that we do have this high over here, around about 38.8. So moving on, we're looking at Brent again. So Brent has again moved quite nicely. You can see it is still following the Elliott wave. It has hesitated now, looks like a bit of a retracement. We'll see what has happened. It actually did make a gap on the hourly. I'll show you that nice big gap it has made, and not completely filled that gap, but it had retraced half of it to continue further upside. So here's an example of where it didn't actually completely fill the gap. So like I said, it's not always 100% accurate, but rather wait until the market sorts out. So don't try and when a gap happens, don't try and trade to fill that gap. So rather just, like I said, wait and see what the market does. But moving on, we can potentially see this to go further down, depending if it uses this as this support we had as a resistance, to use it as a bounce to the downside. If it does turn it back, we can look for potential moves further higher. And we'll start counting our Elliott waves again, or seeing any technical analysis that we could use to analyze the Brent. Moving on to our Canadian dollar Swiss franc. There it is. So again, on the 4-hourly, we have had this multiple top. It has sort of broken, not really closed. This is, like I said, the 4-hourly. So we wait for this close of the candle to see what has happened. Obviously, big candles like this with long wicks are not always a good sign, as we can see over here in the past. See, nice big candle with a wick, and it has actually pulled it back. So we'll keep an eye on it and see what happens. If we look on the daily bar chart, we'll have a look and see what's going on here. So you can see actually, like we might have mentioned this earlier, that it is a head and shoulders pattern potentially forming. So it does still have a while to go to. I would look for it to go to here, around about the zone of 0.73, 0.737, 0.739. As a potential area for it to turn around and complete that head and shoulders pattern. If it does break past, we can look for a move here further lower. Then moving on to a Swiss franc Japanese yen. So here again on the daily, we were looking at this wedge that has formed. So it has now broken past this wedge. We were also looking at a 38.2 retracement, where it sort of broke back into that zone. So it broke past the 38.2 and came back in it with that a nice big bearish candle, and now it has continued. So we'll look, it is retracing at the moment on the daily, so we could potentially see it form a different sort of pattern, rather a bit more of a flag we could look at. So if it does use this line as a resistance area, we could look for it to continue further downwards. But at the moment, it is looking like it is forming a potential flag here. So do keep an eye on that. I would still not look for any potential moves in this until it does confirm my patterns. If we do see it use this as a resistance area for the wedge, we can see a potential move to the downside, and then we could look for a move as well. But now it is looking more likely that it'll move inside of this zone. Hopefully it does still respect our let me just get rid of the other ones quickly. Hopefully it does still respect our Fibonacci levels. That would be great. We can use those for potential bounces inside of this channel. So our Fibonacci levels are again here 38.2, which it has reached before, so it could potentially break past. If it does break past, look for this 50% and I would say 61.8% as well for this retracement. Let me just quickly draw it up here for you. So that's 61.8%. If it does break past the 70%, I would look for potential moves further higher back to this top over here. Let's use the base of this candle over here for potential move. Looking on the weekly chart, you can see it as a very strong resistance areas that has used it to form a nice triple top, or that we've had here before. So that is a very likely area it could potentially move to if it does break further higher. If it does break to the downside, we could look for obviously this low over here, and then a couple of stops on the way down. So we got this low, again we've got this area of support again, sort of more of a zone because of those wicks as well. We have this section over here, and obviously there's a low down over here. So a lot of areas for potential take profits if it does break further down. If it does go to the top, also could use that as a potential take profit if you're looking to take a trade to the long side. If you want, you could also look at trading inside of this channel for the time being, keeping in mind to respect any patterns that could form around these Fibonacci areas as well. So potential moves, trades inside of this channel could be very possible as well. The 4-hour or even the 4-hourly or even the 1-hourly chart as well could be some very nice trades. Moving on to our last pair, which is the Euro CAD. So not a lot, which is probably due to the lack of volume in the markets as we are coming to the end of the year. Traders like to take holidays around this time of the year. And again here we got another. You can see it's actually a gap, so we did fill that gap very strongly. If you look here, nice big gap to the downside, sort of broken that. We broke that double top at that gap, and then again reversed. But this was also coming very close to this low we've had over here. We are also currently hitting a nice zone area for that could be potential resistance using these sections over here. And obviously you can see it has caused a bit of a resistance previously for, let me just pull them up to here. So we use this wick over here. You can see it has had a couple of wick touches as well. So it is a very good area for resistance. If it does break past, we can obviously look for a move to this area over here of 1.57 as this is a consolidating area we've had previously here. So this is a good place to move, and once it does reach here, we could look for potential consolidation or moves within this zone. Once it breaks out, potential moves further either to the up or to the downside. Also keeping in mind respecting these areas of support and resistance that we do have as well. So, but that is it for this video. Very nice and short video. So like I said, keep in mind that this that it is coming towards the end of the year, so markets will slow down. Obviously they will usually there'll be a couple of trades as well, but markets won't react as they usually do, as you are used to. If you're a new trader and you haven't traded towards the end of the year, I do advise to keep your risk very in mind and keep it very under control. Make sure you're not taking any unnecessary trades as usual, but yeah, the market won't move as nicely as I would say what you're used to. So just keep that in mind. Obviously, like I said, volumes are low. people going on holiday, so maybe perhaps it's a good time to go on holiday as well. But if you would like to keep trading, just please stay safe. From everyone here at Blackpool Markets, thank you very much for watching, and enjoy the rest of your week. Thanks.